I think it's also like a matter of timelines. So, for example, I fundamentally agree that Bitcoin is the anti-cheat code, as Max described. It's basically it's a solution for the current system, which has cheat codes built into it. But when you're in the earlier phase of the adoption cycle, if you understand something before other like the consensus understands something, it can feel like a cheat code, and that's why I think it's on both sides of it. Right now, in practice, it does serve as a cheat code because companies that adopt it or people that adopt it or countries that adopt it get some disproportionate early benefits from doing so. That's why it feels like a cheat code. But yes, in the long arc of time, it's a much fairer system with no cheat codes built in. There's no one who gets disproportionate, lower cost access to the money than others, as we see with the fiat system. So I think it's a matter of two different time frames. So for quick context, Kashkari is a member of the U.S. Federal Reserve. Yeah, so that's the context there. And so he called Bitcoin beanie babies, which is funny because they were 15 years into the network. It's a over $1 trillion network. It has multiple valid use cases. But of course, if you're running the largest closed source centralized money in the world, you're not going to be very open to open source money in the same way. And so basically that's like Coca-Cola telling you that water's not as good as soda, for example. But in kind of hidden in his comment was ceding a lot of ground, because the talking point from central bankers used to be that Bitcoin has no use cases, or if it does have use cases, it's illegal use cases, it's drug traffickers, things like that. But his phrasing was, it has no use in an advanced democracy. So basically, he has ceded the ground to billions of people around the world that do not live in advanced economies. Now, I would argue, of course, that Bitcoin does have use in advanced economy, but even if you just take that framing and say, well, so you're saying it's useful to billions of people then, because that's where actually the majority of people live, in developing countries and countries that are not quote unquote advanced democracies. And I've generally found that when I talk to institutions or I talk to people that don't fully grasp kind of the use cases of Bitcoin, I generally have the most progress with them when I describe environments that have more broken monetary systems. If you're describing it to someone in the United States or in the UK or in most of Europe, money works fairly well for them, and so they don't really see the use case necessarily. The problems are more subtle. But if you list off a bunch of examples of people in developing countries with massive inflation or arbitrary bank freezes or all manner of things like that, that'll often click. They'll say, okay, I see why Bitcoin has a use case for those other people. And that, I think, is like the first step in, is basically saying, let's take a more extreme monetary environment or a more obvious set of problems, and let's see how permissionless, open source, non-debasable money can improve some of that. And then from there, you start working your way up. How could it be useful for an advanced economy? You can have that discussion. But I do think that it's interesting how the narrative is changing a little bit and kind of ceding ground to what is actually the majority of the world. One thing I would point out to agree with the GDP issue is, like, especially when you look at capability for war and things like that, I often look at, or like, how big is the economy really when you're comparing, say, two countries and they each have a GDP assigned to them. Is this kind of like apples and apples, or is this kind of comparing two different things? And I remember, for example, this came up when say war broke out in Europe, and they're saying Russia's this percentage of global GDP, for example, and it's comparable to this country. But it's like, if that GDP is very energy based, that's a different type of GDP than another country's GDP. And so I generally find when I look at different countries, if I'm trying to measure their economic size, I look at energy production and energy consumption more so than I do GDP, or other tangible measurements of just overall capital accumulation. For example, population, number of skyscrapers, how much steel do they produce or consume, what does their industrial base look like? I generally find that those are more reliable measures of an economy than GDP. So I would agree with that point. Sure. So for the hurdle rate, if you're looking to invest, it's kind of like, what is the opportunity cost? What is the safer thing you could invest in? And what is the gap you're getting on a riskier investment? So in the current economic environment for decades now, for example, a 10-year government bond is kind of classically used as a hurdle rate. So if you can get, say, 4% when investing in a 10-year government bond of a developed market economy, that's your baseline. You wouldn't want to invest in something riskier with a lower expected return than that, because one is basically guaranteed by the government itself. They can print its own money, so low default risk. And say, well, what would it take for me to invest in equities, right? So for example, you might say, I want an equity risk premium of at least 3%, meaning that if I can get 4% on government bonds, I only want to invest in equities that have more risk if I can get 7% or better. But of course, the structural inflation and money supply growth we have in the system distorts that, because really when you're looking at a 4% return, you're actually often still getting diluted from the network. So for example, in the current monetary system, over the past, call it 50 years, the average money supply growth rate per year in an advanced economy is generally ranged between, say, 6 and 9%. Annualized. And so people often think that their hurdle rate is, let's say, CPI, so you're trying to keep up with the flawed measures of price increases going up. Then they say, okay, well, the treasury bond is usually somewhere around that level, maybe a little bit higher, sometimes lower, and they're looking to beat that. But really, I think that the hurdle rate you want to beat in the current system is the money supply growth rate. And I kind of measure that in terms of dilution or not. Is your share of the network getting smaller over time, or is it getting bigger over time, or is it staying the same? So if you hold dollars or you hold pounds, and you are not earning an interest rate or some sort of cash flow return on that is exceeding or at least keeping up with the increase over time of that money supply, then your share of that money is decreasing compared to the overall network. You're getting gradually diluted out of the system. I think that's the real hurdle rate. And when you look at, for example, you can apply that to other monetary systems as well. If you're looking at gold, for example, gold's average supply growth is estimated to be something like 1.5% per year. It kind of ranges between 1 and 2%. And so you're as you hold gold, you're very gradually getting diluted as a share of the network. And so if you're measuring your performance in gold, you want to have it such that over time your gold stack from this investment or from this decision to do something with your gold is earning you more gold than the dilution that happens through gold mining, for example. And of course, with Bitcoin, the terminal growth rate of the supply is 0. And so basically, as you look out your hurdle rate is just 0 dilution. And so any sort of business that's built on Bitcoin or that earns Bitcoin or that is adding some value should basically earn something that is, you end up with more Bitcoin in the future. So it actually makes calculations more simple in the long arc of time. Right now it's challenging, of course, because Bitcoin's earlier in its adoption cycle, it's volatile. Most companies, their expenses are going to be denominated in fiat currencies in many cases, so they're managing multiple currencies in terms of both their revenues and their expenses. So it's a different environment right now for Bitcoin companies. But basically, I think that's a framework to think about. No matter what monetary system you're in, you want to look at the growth rate of that money. I think that's a better metric than what we see now, which is trying to beat the 10-year government bond or trying to beat CPI. I think those are almost like false targets. You give people these false targets and they feel good that they beat that target. Like, look, you're earning higher interest on your government bond than CPI, so you're doing fine. That's it's almost like a false operation there. But I think that the key thing is to step back and always ask, are the activities that you're doing gonna result in you not getting diluted as part of the network, or are you gonna at least stay even? Are you gonna grow your share of the network? That, I think, is the true hurdle rate.